Welcome back. Part 2 of business costs and productions. We're going to talk about economic versus accounting profit. So first off, profit, we're going to use the letter pi, right? Because we've already used the letter P to denote price. We want to leave it as that. So profit, using the letter pi, right? The Greek letter pi, simply, right, is total revenue minus total cost. The difference between economic and accounting costs is what we're going to include in this cost here, right? So accounting profit, it's going to be total revenue, which I'm going to abbreviate TR, right? And we're going to only subtract explicit costs. Now, explicit costs are not those that curse at you. Explicit costs are those that you actually have receipts for, right? That's a great way to think about it. So when you pay your electric bill for your company, when you pay your workers, when you pay any other ingredient input costs, when you actually write a check and there is a receipt and there is proof that you have paid this bill, that is an explicit cost, right? And so accountants are really only looking at what is your total revenue minus what went out the door, right? Economists, however, always thinking about opportunity cost. And so just as we do with other things, we're going to also take the total revenue minus the explicit costs, but we also want to adjust and subtract your implicit costs, right? And so implicit costs are your opportunity costs. This is the difference. So let's take an example. Let's say that you were a librarian and you decided to start making cookies, right? So you own a bakery now and you start making cookies. All right. Well, the accountant says, how much did you make in revenue, right? And let's say you brought in $100,000 in revenue. Right? And they say, okay, so how much were all of your ingredients and how much did you pay your employees? And you say, well, I paid them all $70,000. Those were my total costs, right? You submit all of your receipts to the accountant or the bookkeeper and they go, great, you made $30,000 profit this year. You're like, oh, wonderful. I'm so worried that I didn't make the right call, right? That's what the accountant does. They only care about what is put on the page. Here's the difference. Economics is always the philosophy, right? So the economist says, what would you have done, right? Opportunity cost. What would you have done if you weren't a baker? You're like, well, I left my job as a librarian. Okay, what were you getting as a librarian? Well, I was making $40,000 a year. The economist now says, well, your economic profit, right, is the 100K minus the 70K, which we already know, right, minus the 40K. Uh-oh, what happens here? Your economic profit is no longer profit. It is now economic loss of $10,000. Now, one thing I want to point out here is that this is a positive statement. No, it's not a good thing. Remember, that's not what we mean by positive. What we mean by a positive statement is that this is a statement that can be tested, right? It follows a formula. There's no judgment here except to say, well, you would have made $10,000 more had you stayed a librarian. A normative statement where we need to be careful, economists would often come along and if they're not being careful or if you're not paying attention and they're going to say, you made the wrong call. You would have been $10,000 richer had you stayed a librarian. Here's what the economist is not taking into consideration that still weighs here, right? And that is, what is the benefit of you having your own thing? What is the benefit of no longer, clocking in to be a librarian? Maybe you decided long ago that you hated books, which I don't know why you would go to be a librarian if you hated books, right? But there are intangible benefits of running your own company, right? Now the question, and here's the point, The question is, are you okay taking a $10,000 loss to be your own baker? And that's what we want you to realize. If you look at that and you go, yes, there are intangible benefits here that are worth $10,000 to me, that's okay, right? But the point is that if we don't ask the question, we haven't really fully answered it, right? That if we're just looking at the accounting profit and we don't ask, well, what would you have been doing had you not opened up your own bakery, then we're really working with incomplete information. And so that's what we want. So that's the difference between economic and accounting profit. All right, so we're going to get into total revenue and total costs in part 3 of this series.